Hello and welcome. You're watching First Take here on News 9, where we break down the morning action on the D Street and bring to you the top stocks that will be in the spotlight today. I am Suyash Maheshwari and with me is Amit Ranjan. But before we get into the nitty-gritties of the market, let's also look at how the global equities are positioned this morning. Over to you, Amit.
Good morning, Suyash. Again, I see red almost everywhere. Dow Jones closed in the negative minus 0.19%. S&P 500 closed in the negative minus 0.39%. Nasdaq closed in the negative minus 0.58%. Stocks, the European market, that was in the positive. It closed in the positive 0.52%. And coming to the Asian markets, Hang Seng is in the red at minus 1.49%. Nikkei 2 is in the red at minus 1.81%. So barring the European markets, it's red everywhere.
All right, and it looks like a so-so session because the global, apart from the global equities, which are witnessing some bit of a profit booking at higher levels.
Yes.
Because remember, November was one of the best months for global markets throughout, right?
Investors are cashing out.
Dow Jones and S&P and S&P 500 and Nasdaq all rallied by 7 to 10%. So perhaps we are seeing some bit of a cashing out, as you pointed out. But the US dollar has surged to a 2-week high as well, pairing all losses from a recent sell-off, and this is in spite of the jobs data in the US dropping to the lowest levels since October of 2021. Now the dollar index as we speak is hovering somewhere around the 104 mark. And crude prices, now this is a big positive for India. Crude prices have fallen sharply overnight by about 4% or so, and now they are at a 5-month low. The price of Brent crude and WTI crude have experienced a 4% decline. Now this is on the back of an unexpected and significant increase in US gasoline inventories. The news has already added to existing concerns about the lagging demand. The US 10-year bond yields fell by about another 5 basis points or so overnight, and it's now at the lowest levels since September of this year. Currently sitting somewhere around 4.1% mark. Now back home, Indian markets opened in the red with the first tick for Nifty coming in, just above the 20,900 mark. We saw some bit of a correction from there on, as you can see on your screen. As of 9:30 a.m. this morning, Nifty 50 was down almost 0.4%. sitting just above the 20,850 mark, and Sensex on the other hand was down somewhere around 0.42%, and but it's still holding above the 69,000 mark, as we can see on the screen. The broader markets this morning are mixed. The broader markets in Nifty Mid Cap 100 as of 9:30 a.m. this morning was up 0.47%, whereas the small cap index was down 0.5% or so, but holding above the 14,400 mark. India VIX, the volatility index, has seen a spike of about 2.38%, and currently sits at about 13.4 mark. Now, this is the kind of pullback that we had been expecting throughout the week. Remember, over the last 7 sessions, Nifty has surged by about 1,200 points, and in case we see a recovery from these levels, it will be it will be on a 8-day winning run, and this will be the best run for both the indices since since June of this year. And today is also weekly contract expiry, so perhaps we'll see a lot of volatility play out in the market today. As you can see on your screen, Nifty India VIX is at 13.4 mark. Now this is the highest levels since May of this year. But to talk about the markets, how they are positioned and more, let's bring on board Mr. Santosh Meena of Swastika Investmart. Hello, good morning, welcome to the show, Santosh. Now, we were talking just yesterday how the markets, even though they are seeing a good run up, the kind of move, the pace of increase has slowed down over the last 3 sessions. On Monday, I think Nifty was up over 2%. Tuesday it was up somewhere around 0.8%. Yesterday it was up 0.4%, and today it's down. So is it time to turn cautious, or is it the consolidation that the market was hoping for?
Yes, first of all, good morning, everyone. So it is the nature of the market. If there is a breakout because of any event, market rally for 2 days, and on third day and on fourth day, it tried to consolidate or pull back. But the view will remain bullish around psychological level of 21,000. Nifty is consolidating, but yesterday's low of 20,850 is acting as an immediate support. If it will be held, then we can expect a intraday recovery. If Nifty slips below 20,850, then 20,660 will be the next support level. And on the upside, 21,000 is an immediate target. Above this, 21,175, 21,320 we can expect on the upside. So view will remain bullish. Because of the weekly expiry, Nifty may consolidate in today's trading session. Yesterday, Bank Nifty underperformed because of the weekly expiry. But if you look at the data of the FIS, yesterday FIS bought 2,000 crore in index future, where 1,500 crore was in Bank Nifty future and 500 crores was Nifty future. But because despite that, Bank Nifty ended into red just because of the weekly option expiry. So I'm expecting Bank Nifty may rebound today in second half. We may see some buying from lower level. So I am on the bullish side. This consolidation is a buying opportunity.
All right, so markets, in fact, markets may move higher on the back of a rally in Bank Nifty, which was, by the way, down about 650 points in the last two sessions. We have, in fact, slipped below the 47,000 mark, and Bank Nifty currently, as we speak, is below the 46,600 mark as well. Now, we'll keep a track of that, but Santosh, shifting focus to the broader markets, they are also, showing signs of exhaustion, where we are seeing big dips on an intraday basis in the last two sessions. What's the view there? Is it time to, turn cautious on the broader markets, given the kind of run we have seen in 2023?
Yes, 2023 was all about broader market, large cap underperformed, but from last 1 week or from the beginning of December series expiry, broader market started to underperform, and large cap pick up because generally if FIs are buying, then the money generally moves towards large cap. So we are seeing some profit booking and consolidation in the broader market, but yes. In coming days, investor has to be very stock specific in broader market. Not every stock will rally. Large cap will outperform, but some stocks will do well in broader market. Like you can see today, power stocks, and yesterday fertilizer stocks were doing well. So you have to identify the theme and right stock to ride the rally. But not every stocks will participate in this rally.
Now, shifting focus to stocks, and I think one of the stocks that we need to talk about this morning is Paytm. The stock hit a lower circuit of 20% this morning, and it was a worst day for the stock since its listing, and from what I see, it has made some bit of a recovery. Currently it's down about 16% at about 685 sort of levels. Now this is on the back of the company announcing plans to scale back small ticket loans and recalibrate its buy now pay later business. Given the kind of fall in intraday correction that we have seen in today's trade, and given that it's a big shift from a business perspective for Paytm, what would be your view there? Should we wait for some further clarity as to where the focus will now perhaps shift to, or is it a good opportunity regardless?
Fundamentally, if I talk about, there was a turnaround in the financials, but this news is acting as a roadblock for the stock, and today we have seen a major fall in the counter. But technically, if you look at from 440 to around 1,000 level, there was a rally. Now exact 61.8% retracement comes around 653 level, and today's low is around 650 level. So it is an important level to watch out. I'm expecting, if you are aggressive investor, this correction is a good buying opportunity. After this fall, there is a favorable risk reward ratio. Keep a stop loss of 640. If this stock will bounce back from here, 800 will be the first target, and we can expect 880 in the upside if there will be any recovery. So you have to be aggressive, and you have to be little patient in this counter.
All right, aggressive and a little patient in this counter.
Good morning, Santosh. I'd like to drive your attention to another stock that is in the news, that is IDFC First Bank. It is down today as I speak around 3%. Now, it's in the news because Cloverdale Investment, which is an affiliate of the private equity firm Warburg Pincus, is likely to sell 1.3% via a block deal. The deal could be worth about $100 million with a floor price of 85.7. Right now, the price of the stock is hovering at 87.65. What do you make of the stock? It's going down right now. Does this deal spell good for the investors, or they should just wait and watch?
Yes, the deal was, I think, done in open market. That's why stock is down. If the deal was done in pre-market, then I think the stock could be in the green. But yes, this correction is a buying opportunity. The technical structure is bullish. There is a classical W bottom formation, and in today's pullback, it tested it 20-day moving averages, and now it is bouncing back. So I believe you can buy at current level, keep a stop loss of 85. It can recover towards 92, 96 levels. So this correction is a buying opportunity.
Santosh, another stock which is up for sale, which the stocks are being up for sale, is Indian Railways Construction International, or IRCON. Now, the government is likely to sell 8% of its stake via an offer for sale, with a floor price of 154 per share. Right now, the share price, even though it is down almost 13%, 7.5% today, 12.95, 13 points down at 159. They are likely to sell it at 154 per share. The 8% offer for sale includes a base price of 4% and a green shoe option of 4%. IRCON, is it an attractive stock?
And I mean, the kind of returns, phenomenal returns that we saw in 2023, it's a multi-bagger stock, has risen about 166% year to date, but a big fall today of 7.5%.
Yes.
Time to buy perhaps for long-term investors?
Yes, stock is correcting today because of this OFS news. The stock has already rallied around 170% this year. I believe it may consolidate for some time in the range of 180 to 150. But after a period of some consolidation for 15 to 20 days, it may again see a momentum. So if you are buying for the long-term perspective, this correction is a good buying opportunity. But if you are looking for from the trading perspective, avoid, because it may spend some time in the range of 180 to 150.
Like we mentioned, it was a multi-bagger over the last year, almost 150% up. It is at 158. The sale price is at 154. The 52-week high was 180. Do you see that, the stock touching that in the near term?
Yes, I think around 150 it may take support, and after taking support around 150, 155 zone, it may bounce back towards 180 level. And once it will cross 180, then we can expect fresh round of bullish momentum. But for timing, it may remain in this range, or I think in next 15 to 20 days, it can head towards this 180 level.
And Santosh, another stock is Adani Ports that we wanted to discuss. What a tremendous rally we have seen in this counter. In fact, in all Adani stable group stocks, the 10 listed entities. Now, focusing on Adani Ports, there are a lot of news flows as well. Now, from what I understand, Adani Ports is looking to buy, Shapoorji, Pallonji groups ports in, in Odisha. And, there was a city buy call yesterday. They have raised a target price. In fact, the stock has rallied somewhere close to 25% in a matter of 5 sessions. Time to book profits?
No, I don't think you should book profit in hurry because there's a multi-month breakout in this counter. It may see some consolidation and then it will again resume its uptrend. So better stay with this counter if you are long-term investor, where 980,000 area will act as an immediate support zone. And once it will cross 1100 level, the next target will be 1225.
Stay with the Adani Ports for now, according to you. What do you recommend, your picks for the day?
I'm not recommending for the intraday, but I'm recommending for medium term. So first stock will be my Bank of India. I'm seeing a beautiful breakout in entire Nifty PSU Bank Index. And Bank of India, after its IPO launch, now it is breaking out important resistance of 115 with a strong volume. I think this momentum is likely to continue. So you should buy this counter with a stop loss of 110, and the target will be 140. And now metal stocks are also showing some bullish momentum after some period of underperformance and consolidation. We are seeing some buying momentum in many metal stocks. So Hind Copper is my pick, where 200 is the target, 170 will be stop loss. And from large cap banks, I'm bullish on the financials and banking, especially PSU banks. So SBI, my third pick, where 660 will be the target, 590 will be the stop loss. And from private space, private sector bank, RBL is looking very strong. Despite 2 days of underperformance of Bank Nifty, RBL Bank is outperforming, and there is a likely breakout of flag formation. So where I'm expecting 275 as a target, 245 will be the stop loss. My last pick will be the polymer from the broader market. It is also witnessing a formation of flag formation breakout, where 1800 the target, 1600 will be the stop loss.
All right, that's Mr. Santosh Meena for you, sir. Thank you for joining us here on News 9. Appreciate your thoughts.
Thank you.
But moving on and looking at the markets, they have moved above the day's low. The day's low stood at somewhere around 20,850, and as of 10 a.m. this morning, we are above that, about 20-30 points above that at 20,876 marks. So some bit of a recovery has been made, but still the index is facing resistance at around 20,900 mark. That will be perhaps a key level to track on a closing basis for the index. And remember, today is the weekly futures and options expiry, so it will be a very volatile day. But Sensex, moving on to that, it's holding above the 69,000 mark, and in fact the index has slipped somewhere around 200 points in today's session, so far in today's session. And it was just yesterday we had scaled a new lifetime high on Sensex as well, and we were just about 300 points shy of that 70,000 mark. So maybe that will be a level to track for the next week. The mid cap and the small cap indices, which were mixed this morning, have in fact turned red, and Nifty mid cap 100 is almost flattish with a negative bias sitting above that 44,200 mark. Whereas the small cap index has seen a significant reversal, and the small cap index is down by 0.13% at 14,209 mark. Volatility, which was in the green, India VIX, which was in the green, has in fact moved to red. India VIX as of 10 a.m. this morning was down almost 3%, but it is still sitting above the 13 mark. And kind of returns that we have seen, the pullback has not been that significant, considering Nifty has rallied somewhere close to 1200 points in a matter of 5 or 6 sessions since the exit polls came out last week. And if you look at, we are still in uncharted territory, and for the index it's been a ride on the upside, a 1000 point jump, but a 100 point correction on an intraday basis is not a big pullback that the market was expecting. And with a slip in India VIX, the volatility is coming down. So perhaps all these factors will bode well for the bulls.
The cautious investors are probably booking profits early. So probably that would be the reason for the slight adjustment.
And even if we look at the rally which started with the general elections, of course, BJP's thumping victory in 3 of the 5 states, which was not expected. Chhattisgarh and Madhya Pradesh were a surprise for the markets, yes. And that's why we have seen a big rally, because the market likes certainty. The market likes continuity in policy and regime. So we were celebrating that, and it's a prelude to a big one, the 2024 general elections. But apart from the domestic factors also, Amit, the global factors have turned favorable for emerging markets and Indian markets. The dollar index has slipped significantly from 108 sort of levels to about 104 now.
And FIIs are coming back.
FIIs are coming back, and they are coming back in a big way. They have invested somewhere close to 8,000 crores in a matter of 3 days. Yes. And if you look at the other cues, the oil price is the big one, I feel. They have dropped by over 20% in a matter of a month or so. And we were talking about them perhaps ending, the Brent crude ending at somewhere around $100 a barrel for 2023. They are now below $75 a barrel mark. And even the bond index, that has slipped to a September low. And of course there will be a lot of big events, but the biggest to track now will be RBI's monetary policy meet. And RBI the decision will come out tomorrow in the morning at somewhere around 10 a.m. We'll bring you the latest on that. But the general consensus is that it will be continuity. The RBI is expected to maintain status quo for the 5th consecutive time. But Amit, there is an outside chance, however small it may be, that in fact RBI may go for a surprise cut. And as we know, a lot of these sectors are so rate sensitive that they'll be affected both on the upside and the downside, isn't it?
They will be, I suspect, tempted for a rate cut. They have had 4 bi-monthlies since the last increase, that was in February 23, when they increased the rates, repo rates by 6.5%. But after that, they have maintained, they have not increased for 4 consecutive bi-monthly monetary policy committee meetings. So while most investors or analysts would be looking at them not maintaining a status quo, some would be tempted towards the thought that RBI may just reduce repo rates to give more liquidity into the markets,
right,
and basically further give a fillip to the markets and the industrial scenario in general. I will explain further, if you allow me,
please,
with the help of graphics. Now, if we can play the first graphic, what the sectors that are most sensitive to the repo rate price cuts are these, they are called also interest sensitive stocks.
Right.
Okay, and they are basically the stocks where in industries where there is a lot of leverage. So industries where there's a high cost of raw materials, where there's lots of borrowing in the market, be it real estate, be it auto. Banking, of course, will be interest sensitive, and of course telecommunications. So these are the 4 sectors broadly which are interest sensitive. What happens to these sectors when interest rates go up?
Right.
That is the first scenario. If they can play it up, when interest rates go, this is okay. Scenario 2, when interest rates go down, the price of money basically goes down. Also, money becomes cheaper for borrowing. Liquidity increases. Investor confidence goes up. Investors' expectations on rates of returns goes down because they are expecting the markets to do well. Present value of future earnings of stocks also goes up. Stock prices go up because there's more liquidity.
Right.
Hence, market capitalization goes up. Hence, valuations go up. Scenario 1 is when interest rates are hiked. The price of money goes up. Liquidity goes down, of course. People are investing more into bank and government bonds and all that, and taking money away from the market. Right. Investor expectations on rates of returns are high. Now, investors now are expecting more because they are cautious of putting their money in the stock markets.
Right.
Present value of future stock prices goes down. Price of stocks go down because liquidity reduces. Market capitalization goes down, and valuations of companies goes down. Now, if we can look at how the sensitive stocks, interest sensitive stocks, have done in the last 1 year.
Yeah, let's move on to that. If you could play
that graphic.
Starting real estate,
real estate, auto, banking, realty. That is
right. So
telecommunications, of course, small
that are rate sensitive.
Rate sensitive. Realty, in the last 5 days, in anticipation of the gains have been 4.56%. In the last 1 month, they have been much more, 13.91%. Last 1 year, of course, almost close to 60%. Realty has done well.
Best performing sector, in fact, of 2023.
Unexpectedly, because they had been floundering for quite some time in the past. The next sector, if we can put that up, banks, of course, 4.87% in the last 5 days, 1 month, 7.8%, 0.8%. and 1 year 8.67%. It is a performing sector, but it has been on a high.
I mean, it was a laggard for the majority of the year, but in the last 5-6 sessions, we are seeing a good bit of a breakout where the index has rallied.
We've been talking about it.
Exactly, 2,000 points in a matter of 2 days.
2 days. Auto,
Right.
this sector has done well at least over the last 1 year. Last 5 days in anticipation, the gains have been 1.64%. 1 month, 10.19%. 1 year, 38.21% in the auto sector. And this is expected to grow even further in the times to come. Thank you.
All right. Now, the Reserve Bank of India, as I mentioned, the monetary policy is expected to hold interest rates steady for the 5th consecutive time. This is on the back of a expectation of inflation further easing in the months to come, and the economic data that's coming out is also stronger than expected. So there is a case for RBI to maintain rates as of now, but we also have FOMC meet that will be that the market will be taking cues from next week. US Federal Reserve December policy decision will come out next week on December 12. But moving on and coming back to the markets, the Indian markets are building onto those early losses, and as of 10:09 a.m. We are currently, the Nifty 50 is currently just about 10-15 points shy of the 20,900 mark. So on the upside, we are facing quite a bit of resistance at around 20,900 mark, but that looks but that is expected given the kind of run we have seen, and the fact that today is a weekly expiry for Nifty futures and options contracts. So the expectation is that volatility will pick up as the session goes by. Sensex, on the other hand, currently is down about 220 points and sits at 69,429 mark. The mid cap and the small cap indices, they are flattish. As of 10:10 a.m. this morning, Nifty mid cap 100 was up 0.02%. So it's currently hovering around the 44,239 mark, whereas the small cap index is also flat with a negative bias. The index is down 0.02%, but sitting above 14,500 mark. And moving on to sectors, the big mover, of course, which was Nifty Bank in the last week, that is seeing some bit of a correction build up. Yesterday, we had scaled a record high of 47,250 mark. That was the expiry day for Nifty Bank, but then we corrected from there on and ended about 200 points below 47,000. The pullback is in fact continuing this morning. As you can see on your screen, Nifty Bank is down somewhere around 0.68%, and this is as of 10 a.m. this morning. Nifty Bank is sitting at around 46,605 mark. Another sector which was a laggard in yesterday's trade was the auto pack, which fell amid a correction in two-wheeler stocks after CLSA downgraded some of these two-wheeler stocks, your Bajaj Auto, TVS Motors, Eicher Motors, and amid concerns of valuations. So because of that, we had seen some bit of a correction in the auto pack, but the auto pack has recovered in fact, and it has scaled a new lifetime high in the morning trade. As we speak, Nifty Auto is up 0.64%, closing in on the 18,000 mark. Currently it's about 17,900 points higher. Other sectors which are in focus is also the pharma pack. Now the pharma pack was facing some bit of a pressure around the 16,300 sort of levels. We are currently below that, but we are seeing good bit of a momentum build up in the pharma name as well. Other sectors, your FMCG, IT, media, metal, all of them are in the red this morning, but we'll obviously be keeping a close eye as the market is expected to remain choppy throughout the session on account of the weekly contract expiry for Nifty. But with that, it's a wrap on this edition of First Stick. Keep watching News 9.
Delhi has the fastest growing metro network